you can focus on these two patterns plus these indicators for a few weeks, you'll start to make consistent profits in the market. Many of you guys have potential to make it in this industry, but the only challenge you face is focusing on too many strategies at a time. Guys, set yourself a challenge today of only focusing on these patterns for a few weeks. Trust me, you will be able to share with me astonishing results. Guys, take this serious, please. Just for a month, you will be able to see how your trading could easily change within no time. So before I take you through the bolts and nuts of these strategies and indicators, make sure you subscribe because it helps out our team to continue producing great content for you guys. The first pattern that we shall be focusing on for these coming weeks is called the kicker signal or the kicker pattern. This comes in two forms. We have the bullish kicker and the bearish kicker. We shall begin with the bullish kicker. This is where prices gap up at or above the previous day's open and moves in the opposite direction of the previous day's bearish direction. Now let's look at the bearish kicker. This is where prices gap down at or below the previous day's open. So the kicker signal means the investor sentiments have drastically changed in an opposite direction. Many factors can lead to a formation of the kicker signal. For example, news, but news comes in different format. For example, a company beating earning estimates could cause a kicker signal. Maybe a company having a breakthrough in research it has been conducting for a given period of time could also cause a kicker signal. Maybe a company acquiring a competitor could also cause a kicker signal. This is because it could increase its market share. Hope now we are on the same page concerning a kicker signal. So now let's look at the second pattern, which we call the J-hook pattern. The J-hook pattern is simply a rest in an uptrend or downtrend. The J-hook pattern comes in two forms. We have the bullish J-hook. This one is formed in an uptrend. Then we have a bearish J-hook. This one is formed in a downtrend. It should be noted that the J-hook should not be deep enough or sharp enough to threaten the current trend. So guys, look at these samples. These are the kinds of the J-hooks we should be hunting for. As you can see, the rests are not deep enough to threaten the current trend. You can see right here, these rests are not deep enough. Now look at these second samples. As you can see, the rests are deep enough threatening the current trend. So we shouldn't be looking out for this kind of J-hooks. Guys, it's important to note that we have a simple rule we follow while trading the J-hook, which is wave 1 of the J-hook must be equal to wave 2 of the J-hook. It shouldn't be exact, but it should be almost equal to wave 1. Those are the patterns that we shall be focusing on for the next few weeks. Now let's move on to the indicators that we shall be using. We shall be using 3 moving averages. The first one is the T-line. This is simply the 8 exponential moving average. T-line helps us on entry but also finding the direction of the market. Then the 50 and the 20 simple moving averages will simply act as targets. The reason we have the 50 and the 200 is because almost all the big money managers around the world use them to make their decisions. Guys, for you to make money in the markets, you don't need complicated indicators. The simpler the strategy, the more profitable it will be. This is because it will be easy to understand, apply, or even execute over time. Now, let's see how we shall be trading these patterns using the indicators above. We shall start with a J-hook. For us to take a buy trade using a J-hook, 4 conditions have to be met. The first condition is to determine the direction of the general market. This can simply be done by checking the indices, the Nasdaq or the S&P 500. If the indices are above the T-line, then we consider that an uptrend. But if they are below the T-line, then we consider that a downtrend. Looking for an impulsive move, that will be our second condition. The third condition is to look for a simple pullback and a close above the T-line. Then the fourth condition is to look for a confirmation signal. By the way guys, this strategy works based on the H1 or H4 time frames. Now let's hop onto the charts and look at some illustrations of this strategy. Guys, this is how our charts will be looking like. As you can see, they are very clean. We don't have many indicators, and that is key to success. Having fewer indicators is a key to success. So guys, let's flip onto our next chart, which is Disney, and this is the H1 time frame. So after determining the direction of the general market, in this case we have already determined that the Nasdaq and the S&P 500 are in an uptrend since they are above the T-line. Remember, we say the T-line is the black line. So the next condition is we look for an impulsive move. As you can see right here, we had an impulsive move. Then the second thing is we wait for prices to pull back and test the T-line, forming our J-hook. We said the J-hook must be at least comprised of 4 candles. As you can can see right here, the G hook was almost comprised of 5 candles. But if you look critically on this stock, prices tested both the 50 and the T line. That is an added confirmation. Prices testing the 200 and the T line, then forming a morning star signal. So right here, we simply place our entry right here. Then our stop loss below the low, then we target a 1 to 2 or a 1 to 3, whatever you are comfortable with. But remember, we said wave 1, this is wave 1, must be equal to wave 3. So we place our take profit right here, then we wait for prices to play out. As you can see, prices took off like crazy, hitting our take profit. Guys, now let's look at our last pattern, which is the kicker signal. You know, a kicker signal can be traded in many formats, but I'm going to share with you the most optimal way of trading the kicker signal. So for us to take a buy trade, 4 conditions have to be met. The first condition is to find the direction of the general market. Then the second condition is wait for prices to gap up through a major level, forming a kicker signal. The third condition is we wait for a pullback or a minor consolidation to the T line. The last condition is to wait for a candlestick confirmation signal. This could be in form of a morning star signal or any buy signal. So now let's flip onto the charts and have a look at some illustrations. Guys, this is the H1 chart for Netflix. This is how it looks like. We said for us to take a buy trade using the kicker signal, 4 conditions have to be met. And the first condition was to first determine the direction of the general market. In this scenario, I've already determined that the Nasdaq and the S&P 500, they are in an up direction since price is above the T line. The second condition was to wait for prices to gap up through a major level. As you can see, prices gapped up through this major level, forming a kicker signal. So the next condition is to wait for a pullback to the T line or wait for a little consolidation. As you can see, we had a little bit of consolidation right here. So after seeing this candlestick confirmation signal, which is a morning star signal, we simply place our buy trade right here, then our stop loss below the low, then we target a 1 to 2 or a 1 to 3. As you can see, prices took off like crazy, hitting our take profit. Now guys, go ahead to commit to this strategy for weeks. It can be 3 to 5 weeks. Commit to it. You will see how it will change your life, and most importantly, the way you trade. I can't wait for you guys to share with me your results after those weeks. They will be astonishing, I promise you. Commit to it, try it out, give it time, and serious commitment, guys.